From theCUBE studios in Palo Alto and Boston, bringing you data-driven insights from theCUBE and ETR. This is Breaking Analysis with Dave Vellante.
At the beginning of each year, as is our tradition, we team up with ETR to dig through the latest data and craft 10 predictions for the coming year. This year's prognostications follows the publication where we graded our 2025 predictions. And we did okay. We self-graded a B+, so not too bad. In this breaking analysis, Erik, Bradley, and I tap some of the most telling nuggets from ETR's rich data set and put forth our top 10 predictions for enterprise tech in 2025. And I want to share with the audience, most of the predictions are backed up with data based on proprietary market intelligence from ETR's Technology Spending Intentions Survey, TSIS we call it, and its quarterly macro drill down data, which surveys more than 1,700 business technology leaders. Each quarter, ETR has launched a new and improved platform, by the way, on its website, etr.ai, so check that out. And with that, welcome. Erik Bradley, good to see you, my friend. Thank you for making some time for this year's episode.
Always good to see you. I think this marks 5 years in a row. I think that's quite a run. I should have bought you an anniversary gift or something.
Yeah, 5 or maybe even, it might even be 6.
Maybe 6?
Yeah.
I should get you a snowblower for the storm that's coming our way.
I just got a new snowblower, but it's small, but we'll see what happens on Monday and Sunday. Anyway, each year we get thousands, like literally thousands of inbound predictions from PR firms and folks that are, they see that we publish and they want to, chime in. And so it helps shape our thinking, and, we go through each one and categorize them. And each year the folder, as I just showed you, gets larger and larger. In the graphic here, we show the mix of topic areas this year. Of course, everything is AI, and we tried to isolate those that were AI specific. And as always, security is top of mind for forecasters, as you can see, with 25% of the inbounds, but AI took the lead this year. And with that out of the way, here's a scan of this year's predictions just in a single graphic. They span IT spending, AI ROI, Nvidia's moat, data, LLMs, cloud, changes to the SaaS model that we see coming, security, hardware pricing, and related to the memory shortage, and then the impact of AI on jobs. We'll close there with a banger. Okay, Erik, let's dive in. Our first prediction, IT spending is going to increase roughly 5% in 2026. Here we show data from ETR's quarterly macro drill down, spans a 5-year period. And Erik, since COVID, we've seen real pressure on IT budgets as interest rates rose and then uncertainty reigned. You had geopolitical tensions, wars, tariffs, and the like. And you can see the orange IT decision makers this year expect 4.6% increase in their budgets. So Erik, at 5%, maybe pushing it a little bit. So pick up from here. Do you concur that we're going to see a somewhat better than projected number? One could take either side because, as we point out, large organizations, those big spenders are more conservative. They're down at less than 4%. But the C-suite is more optimistic, as are those folks in Asia Pacific, those customers there. So take us through the data and give us your take, please.
Sure, you got it. So definitely has been a tough run for a lot of the organizations as they've been handling it. There's been have to do a lot of audits, a lot of belt tightening. But what we're seeing now is very optimistic. So one of the things here, when we break down, not only is the number much higher than the initial 2026 estimate, it actually jumped in quite a bit from our first October survey, where we asked for the first time about forward spend into January. So that's very optimistic. And in this survey, 74% of all respondents indicated that they plan to increase their spending. That's the highest level we've actually seen since January of 2022. So those are both great numbers. All enterprise size cuts participated as well. And the Fortune 500, yes, it's lower, but it grew more than a percentage point survey over survey. And like you said, C-suite at 5.2, higher than the mean. I think this is all very good. Very good, very powerful stuff, and we'll have an update on it in just another month or two.
And I want to note, this is IT budget, so don't confuse this with vendor revenue from like IDC and Gartner. You might see that, those research firms are projecting double-digit growth, but they're counting, revenue from the vendors. This is IT spending, IT budgets, it includes staff, et cetera. And I would say this, so it's not including all the data center build out, which those guys would count. But over the period of time, we do expect that data center build out is going to provide, maybe through API services, the ability to tap into token generation. And so you're going to, over time, we think you're going to see more of the IT budget shift away from traditional infrastructure and, traditional hardware, software, and services toward token generation, number one. And number two, it's not inconceivable, and we'll get here, Erik, that, over time, you're going to see AI, replace some headcount. We're going to see scaling without, with less headcount. And so that could have a factor on IT budgets, because staffing is probably one of the biggest line items. So that's more of a longer term prediction. You're comfortable with 5% this year, correct?
I think I'm hopeful, and I think it might actually tick a little bit higher in the upcoming survey. But right now, I think 5% is a good number, yes. And all of the things you said are accurate. The one thing we know for sure is that these budgets are going to morph and change over time with all the inputs we're dealing with.
Yeah, definitely. Okay, next prediction, 2026 will be the year of AI ROI. Finally, in previous years, we said it won't be the year of AI ROI, but we believe we are on the cusp of a productivity boom. We saw last quarter, it came in at 4.9%. U.S. GDP could actually have a 6 handle in front of it this year. We'll see how much of that comes from inflation, but still, it's ticking up. And we're starting to see evidence that enterprises are getting AI right. And specifically here, we highlight a notable uptick in those customers within the Global 2000 that are seeing sustained ROI at scale. This is, more acute for customers that are buying solutions from external vendors, and technical teams are seeing the strongest returns. Ironically, it's, some of the smaller companies are getting, ROI from in-house. But Erik, we're seeing also a notable uptick in FinOps. So, this sets up a steepening of the ROI curve this year. Maybe you could take us through this data specifically, and particularly the leftmost set of bars on who's measuring ROI. Take us through this.
Yeah, so we've been doing this for quite some time. As you can see on the left, that was November 2024 when we first launched it. And if you combine those that were not measuring ROI and had not seen any, you were almost at 50%, which is astronomical when you're talking about the amount of money that was being thrown at this situation back then. Now it's obviously gotten a little better. We've seen those not measuring it go from 27% just to 18%. So that's the key number right now. That's why we're seeing more FinOps. And that term is something that 6, 7, 8 months ago wouldn't pop up in my insights panels and interviews. I'm hearing it constantly now. And another factor here is that on the other box that we're looking at, the 1% to 10% ROI, since November of 2024, yes, it's fluctuated a little bit, but it has steadily increased. So we are definitely seeing a little bit more of a realization around the spend. Another aspect, not in this particular chart, but in our AI series data, 66% of the people said that ROI in AI only comes from cost efficiency and margin improvement. So therefore, auditing and control of that is absolutely critical. Only 23% said they expect the ROI to come from actual revenue growth or new product creation. 66% said this is all about margin improvement and cost efficiency. So therefore, you have to have FinOps wrapped around it.
Interesting. Okay, thank you for that. All right, next prediction comes from some of the work done by theCUBE Research that was published earlier this month after Jensen's keynote at CES. Prediction number 3, NVIDIA further separates from the pack. That's the GPU pack due to its better cost per token advantage. Now, NVIDIA announced at CES that Vera Rubin was in full production and is going to ramp this year. They shared data that showed a 5x improvement in performance over Blackwell, a 10x throughput improvement, and a 10x improvement in token cost. And we think this all leads to a significant uptake in demand. This is all done in 12 months. Remember, Moore's Law was 18 to 24 months, and we're talking about doubling the performance. We're talking a significantly higher throughput and performance and lower cost. And we think that's going to lead to a 15x increase in demand, and based on Jevons paradox, which says price goes down, people buy more. And we've seen that throughout history. So our prediction is all this talk about, you're talking about Google TPUs and ASICs eating into NVIDIA's moat. We think that's rubbish, and we expect NVIDIA's modest PE ratio. Erik, your world used to be a securities analyst. NVIDIA's hovering in the mid-20s. I think it's got a lower PE than Walmart. We think that's going to increase noticeably as people begin to realize the advantage that NVIDIA has here. And moreover, we think NVIDIA is going to essentially have no competition in the data center other than where demand can't be met. So that's going to support some of the competitors, but they're going to have to get a foothold on inference and workloads at the edge, where, by the way, we think NVIDIA is probably also going to do very well, especially given that they just locked up that deal with Grok with a Q. So Erik, we don't necessarily, ETR doesn't, look at the silicon space. We don't have data to back this up, but anything you want to add to that?
Well, first of all, great comment about the equity valuations. There's really no rhyme or reason sometimes while one particular area is favored and will get 100x growth multiple while another is for some reason depressed. So I thought that was a fantastic comment, but not too much to add here. I guess what I would say is that it's quite obvious that demand is far outweighing supply. And pretty sure every supplier is going to sell whatever that is they have they're offering. I think this is just one of those rising tides are going to lift all chip boats at this moment. And I don't think the suppliers want to see that dynamic change anytime soon. So I think it'll probably stay the course.
Cool, thank you. Okay, next prediction is around data, and we're going to use a snowflake example to frame this. Number 4, data gravity benefits platform incumbents. And the data here that Erik's going to explain in detail show that services that add on to the core database platform, for example, Cortex from Snowflake, are a facile extension to the core database. So said another way, the core platform is sticky, and that's going to confer advantage to the incumbent with ancillary products. And Erik, that's a positive for Snowflake. Presumably it extends to the likes of Databricks and Oracle and Microsoft as well. But explain the data here and add some color to this prediction, please.
Yeah, sure. So the trend is actually seen across multiple data sets, but let's start on the chart you have on the right. This is from our build versus buy AI series, where we're only asking the respondents that are building their own AI applications. And from that, we can infer all sorts of tech stack analysis and cross co-occurrences. So what we're noticing here is a gravitational pull where towards your database ecosystem, and using Snowflake as an example because it was particularly the strongest that showed up in this analysis. So if you're already using Snowflake for one aspect, you're very likely to stay within that ecosystem for another aspect. And over here, we're showing, search, vector search, and vector database. We're showing foundational models combined with other aspects as well. We're seeing this in cloud, particularly with GCP. We're seeing that grow, which is surprising, but that was another area that we're seeing it. Now, if you move on to the left, what this is actually causing is a huge resurgence in Snowflake's database data warehousing spend intent. As a matter of fact, that has driven Snowflake back to the #1 public company net score in all of ETR's universe across everything we track. So really basically seeing a gravitational pull that once you're already in an ecosystem, you're more likely to stay in that ecosystem for other components. And again, remember, this is for building your own AI applications and the tech stack around it.
I'll just say, thank you, Erik. This is an example of the predictive power of the ETR data set. I certainly remember in COVID, ETR was the first to see the work from home trend, and it dramatically affected the performance of companies like CrowdStrike and Okta and Zscaler. We certainly saw the ascendancy of Snowflake in the data set. We saw the ascendancy of Databricks. We saw the reverse as well. We saw softening in Snowflake, and you saw, how much their stock got hit. And we're seeing the bounce back. We saw Splunk. And so it's been a really powerful leading indicator of what's actually happening in the market. Okay, let's go on to our next prediction here. Number 5, leading LLMs shift focus to enterprise AI. I want to unpack that a bit because you may think, this is kind of an obvious forecast, guys. Anthropic's already there, and that shows up in the data below with the recent uptick, and Erik's going to take us through that. But first, let's lay out the map. You got OpenAI and Microsoft in the upper right. They're ubiquitous on account penetration. That's the x-axis, and they show spending momentum. That's the y-axis. AWS and Google are on top of each other, and in a later prediction, we're going to frame that further. Databricks and Snowflake also have good data, and they're very kind of close to each other. So it makes sense, based on our previous prediction, that bringing AI to that data platform is giving them traction. Meta Llama was like the #1 position on the y-axis last year, and it's just well below that 40% line, and it's dropped out of the top 4 LLMs. We don't even really consider them a leading foundation model anymore relative to the other 4. And then you see the pack of legacy ML/AI players that are kind of fighting for relevance. So here's the prediction, and credit to folks like David Floyer and George Gilbert have been working on this. OpenAI, they're going to go hard after the enterprise, and they're going to follow Anthropic's lead. ChatGPT's consumer volume is going to prove to be advantageous, we think, for enterprise. It's not a bug, it's a feature. And the prediction is OpenAI's enterprise revenue is going to surpass that of Anthropic's enterprise revenue in 2026. Google looks very strong, as you can see here with Gemini, but the vast majority of Google's revenue, remember, comes from ads. And Sam Altman, remember he had a code red last month in December and said they're going to refocus and they're going to put advertising in the back burner. And then just recently, they made moves to put advertising front and center. And we think that's specifically designed to go after Google's dominance. Remember, search queries cost fraction of a pennies to execute, whereas AI queries are 100 times more expensive. So Google would like nothing more than to have no competition in ads. And we think OpenAI's recent moves are designed to really pressure Google's advertising dominance and put their foot in the game. Well, we've seen Microsoft try to do something similar by AIifying Bing, and that failed. But OpenAI, we think, has a better chance, given, their position with 800 million monthly active users, et cetera. And finally, we think Grok, with a K, is going to be a player at the edge. Remember, also, Elon was going to design a chip for the data center, but related to our third prediction about Nvidia, he realized he couldn't compete with Nvidia. So he bagged that, lined up the supply with Nvidia, and now he's building out the Memphis data centers and faster than anybody thought possible. But remember, Tesla has a chip design a group around ARM, and they customize the neural processing units for their cars, their autonomous vehicles, so they could eliminate LiDAR. So Elon's already at the edge, and we think Grok is going to bolster that position. So we expect Elon to further innovate in silicon, but again, at the edge. So, okay, Erik, my neck is stuck out there. Why don't you pick it up from there? Thoughts on that prediction, and then we're going to bring back the graphic and have you take us through the data.
Yeah, I think we should let the data lead on this one, if you don't mind. So I think what's really important to point out right now is the pervasion. So if you go left to right, you're going to take a look at what we call pervasion score. And it basically is a great leading indicator of how entrenched the company is into the enterprise itself. And, OpenAI is already nearly at 40%, where Anthropic is at 20%. Now, the other players are in single digits. They're basically, non-existent at this point. And even pointing out Metalama, it actually lost enterprise pervasion survey over survey, whereas Anthropic in just a year went from 10% to 20%. So they are certainly accelerating on a pervasion score. And I think that's really important to note and watch how that continues to play out. And I can't disagree with your prediction at all. I completely agree with it. Just yesterday, as a matter of fact, we found out that OpenAI API added more than 1 billion in ARR last month alone. I mean, that's significant enterprise-driven revenue generation. This is not a consumer chatbot anymore. And once, those floodgates open, they're going to continue. So spot on this one.
And I'll add, again, this is some of the work that George Gilbert has done and David Floyer in thinking about how AI can drive productivity the way it has for coding. We're seeing big companies, JPMC, Walmart, Capital One, other financial institutions, big pharma like Lilly, they're leaning into AI. They have the engineering chops to get that done, but most enterprises don't. And so there's a belief that these powerful LLM companies are going to morph into a sort of a new breed of software that's going to make it a lot easier to adopt AI via API. So they're going to be taking all that data center capacity and they're going to be tapping into that through APIs and generating tokens for their business to drive productivity. So that's something that is going to evolve. We're not predicting that you're going to see that as obvious in 2026, but over time, we think that relates to what we were saying earlier about the shift from legacy IT, traditional compute, storage, networking, labor, to more of an AI-ified organization. People call it AI native, whatever you want to call it. So anyway, let's move on to the next prediction, number 6. Google Cloud Platform, on the strength of AI in particular, but also other areas, continues to close the gap on AWS and Azure. By our estimates, GCP grew 40% last quarter. Remember, Alphabet doesn't disclose GCP growth, only they disclose Google Cloud overall. But we know GCP is growing meaningfully faster than Google Cloud overall. Google's Cloud's operating margins are now in the black in the mid-20s, and we think that's going to continue to improve. And Google's data story is world-class. Other parts of Google's cloud business are doing well. And Erik, we show here, despite the fact that GCP is in third in account penetration, they were the only ones in the big three that your data set showed accelerated net score year over year. And you have evidence in the data that suggests it relates to AI, data, and other parts of their business that have momentum. Please take it from here and give us your thoughts on prediction number 6.
Yeah, this is one of the more fun aspects that came out, and you gave us a great shout out, Dave, of over the years, a lot of the things that we've been able to predict and trends that we've been able to see with our data, because it's all forward looking. So GCP, absolute force across all ETR data sets right now. What we're looking at now is our core thesis, the spending intent, and in both the cloud sector and MLAI sector, it is the only one of the big three cloud players that actually rose, whereas AWS and Azure both fell. So does it have the same penetration? No. The pervasion is trailing, particularly Azure, by a wide margin. So it's not as big, but we're also seeing that spend intent rise at Fortune 100, Fortune 500, Global 2000. These are places where Google historically didn't see as much traction. So it's not just SMBs. It's not just, regular large sizes. We're talking about the world's biggest organizations are increasing their intent on multiple sectors around GCP. Then we switch to the AI series data, and we're seeing increasing usage across Google's AI build stack, Gemini, Vertex AI, all gaining share, all growing survey over survey as we comp the data as well, as a foundational model, as a cloud hosting platform. Yeah, so across the board right now, Google looks fantastic in our data, and it's been one of the fun vendors to point out this survey.
They're kind of the tortoise in the race, and I would say they've been patient. They obviously have the capital to be patient. And as I say, their operating margins are now in the mid-20s, which is, starts to become respectable. Think about AWS is probably, it bounces around, but it's sustained 40 plus, many, many quarters. And Azure, I think you could argue is even higher because of all the software contribution, but I fully expect that Google's going to get there, and that's going to start throwing off some significant cash for that business. All right, prediction number 7. Despite all the negativity around SaaS vendors whose stocks have performed really poorly, we're talking about Salesforce, Workday, ServiceNow, et cetera, our long-term belief is that seat-based pricing models, we've always said they're outdated and are not aligned with customer value, but we think software vendors, of course, are very good at preserving their revenue and growing their business. So AI is going to be a tailwind for SaaS vendors, and that's going to start to show up in 2026 in our prediction. Here we show spending data from ETR that Erik's going to walk us through in a moment, but it basically shows that seat penetration is moderating, but spending continues to grow. The implication is the sky is not falling on SaaS vendors. I heard Carl Eschenbach, CEO of Workday, yesterday, I think it might have been today, it was yesterday on TV, sounding kind of defensive, but basically saying, look, we're not seeing the negativity that everybody's talking about in the headlines. Our customers are asking us for help in leveraging AI. AI is being infused into all the SaaS products. The data, the metadata, the business process logic all live inside these apps, and they're trusted. So software vendors, as I say, are very clever at preserving revenue, and we think we're going to start to see a move toward outcome-based pricing in 2026. And will startups eventually emerge and compete to disrupt SaaS? Yeah. But it'll take some time, and the effects will be limited, we think, in 2026. In the meantime, customers are relying on SaaS vendors, in great detail, and they run their business on SaaS, and that's going to continue, and we think they're going to continue to invest. Erik, this data that we're showing here is just incredible and just shows the power of ETR, the depth and rich texture that you bring to the table. Take us through the data and your thoughts on this prediction.
All right, thank you. First of all, I'm going to give a shout out to my colleague and one of the best analysts we have at ETR, Mark Smolden. He covers a lot on the financial services side for us, and he's the one who kind of put this all together from our AI series data. So what we're looking at here, it's a little bit of an eye candy slide. So it's a two-parter here. We're asking people directly, is AI killing SaaS? And my colleague Mark made the term SaaSaker, which I thought was a cute term for it. And the first part of it is yes, the seats are getting wiped out. And we can look at that on that first chart. We can kind of see the Global 2000 there just to walk you through it. 30% said more seats, 40% said same seats. I don't think we have it in this particular chart. It got lost. But 30% said they were going to see less seats. So the seat offset there is negative. We're seeing negative growth on seats. However, we directly ask the next follow-up question is, okay, but is the spending level going to offset that? And when you see on the bottom chart, yet again, yes, it is going to offset that. 51% said the actual spending is going to exceed their seat. So what we're seeing, if you go all the way to the bottom right in the Global 2000, is a 36% spend net impact over time. So is it taking seats? Yes. Is it killing SaaS? No. What we're seeing is what you basically said. We're going to see a pricing model that a shift. I don't think this is doom and gloom for SaaS. I think it's just about evolution. And heck, at Davos this week, all three of the big CEOs that were out there were downright rosy and optimistic. I mean, they were skipping around. They seemed so happy. So we'll see what happens as the earnings roll out and we actually get some hard numbers. But what we're looking at here is a transition at SaaS, not a massacre.
Yes. So thank you, Erik, and thank you, Alex. Okay, let's bring it back to prediction number 8, which is kind of a bold one here. In 2026, a leading SaaS provider will see a breach where no human credentials were stolen. The prediction is we're going to see documented a novel security breach that will be coordinated cross SaaS, so across SaaS vendors, and an event that involves multiple AI agents from different vendors. So this goes beyond a single agent. And I want to give a shout out to one of the predictions that came in. This came in November 11th, the Veterans Day, from Shahar Man, who's the CEO and co-founder of Backlash Security. He said a major MCP breach will define the AI coding threat model. And he said we'll see in 2026 the first large-scale breach originating from MCP will occur. And you saw the Anthropic breach, so he called that. But that was not what we're talking about here. So this goes beyond what his prediction was, beyond a single agent breach. And it's essentially an agent's going to reprogram another agent with a prompt injection that will that infected agent is going to use MCP connections across different SaaS platforms to wreak havoc. So it's going to go into finance and apps and HR apps and supply chain, et cetera. And that could be across different vendors. So this is not a hack that involves stealing human credentials. It's a logic hack that's affected by an agent redirecting another agent. So Erik, some folks are referring to this as a poly-agent breach, where the infection doesn't just stay in one system. It uses your AI agents think of them as bridgeheads to jump into other departments and even other companies across the digital supply chain. So we've never seen that before, but this prediction says it's coming. And remember, this is invisible to antivirus, so the AV software is not going to pick it up. And this is ETR observatory diagram. It shows the leading vendors in identity and access management. And there's no silver bullet here. This, again, not a human credentials hack. Firewalls are useless here because the agents are doing what they're directed to do. And this is going to move at machine speeds. Phishing campaigns can sometimes take weeks or maybe even months to orchestrate with humans. This is all happening at light speed across the supply chain. So to defend this, organizations are going to need to put in like an AI honeypot tokens to lure the bad agents, and semantics that scan every agentic conversation, and much more sophisticated defense systems that most organizations, Erik, are not going to be set up for in 2026. You follow the security market very closely. Your thoughts on this?
You're 100% absolutely right. The number one topic amongst all our CISO community and the people I speak to, and I speak to a lot of them, is right now agentic AI governance and protection and security. Non-human identities require zero trust, full stop, period. They have to be governed. You cannot trust them. They can certainly prompt the agent next to them. And if one has access that you granted, and then that one attaches itself to that agent, next thing you know, the entire command has access to things you do not want. What you're looking at there is the ETR Observatory for Identity Access. That was last year's. This year's just closed today, and we'll have that out again in February. So we'll have some updated information. But I think what's really given this credence is every single year, Dave, we do our own top trends report. It is 100% end user driven, all qualitative. They write in what they think it's going to be. Thousands and thousands of entries. And one of them, without a doubt, was adopting identity-centric and zero trust principles as one of the top 10 priorities this year, period. I think the recent Palo Alto CyberArk acquisition is a great segue into discussing this. I know for a fact at SailPoint, they were very much targeting this type of rollout, helping their clients get in front of this. But, if I can read a quick quote, one from a Global 2000 CISO I recently spoke to, and he gave me permission to read this. He basically said the more that Palo can help level up and help customers make accurate decisions based on data visibility and double down and leverage that intelligence from the cyber acquisition, it's going to be a force multiplier for the whole industry. He added, we are definitely adopting agentic AI in security operation context for triaging alerts, initial investigations, and it looks like Palo has already invested well in the agentic AI security for operations perspective, but they need to bring that over to the identity side. And that's where it's actually going to be useful for us as a company. Again, Global 2000 CISO, very large organization, 100% focused on this, as all his peers as well.
Yeah, it's interesting. It reminds me of a conversation I had with Nir Zook, who was the founder of Palo Alto Networks last summer in New York City. And I was saying, well, you know, you got to get the data. You got to have the data. And he said, well, it's more than that. You got to have the right data at the right time, and you have to know what to do with it. And, you know, of course, his implication was we know what to do with it. But as you know, Palo's on a big consolidation trend. You've seen it with the acquisitions, of course, CrowdStrike as well, you know, maybe with a little different strategy through some ecosystem connections. But I think the bottom line here is, as we know from our research and the ETR surveys that you do around RSA, we're starting to see signs of practitioners being able to reduce the number of tools in their security stack, but it's certainly not widespread yet. I think the consolidators would tell you, the platformization guys would tell you that they're seeing it and it's powering their business. But in the grand scheme of things of the TAM, the vast majority of organizations are exposed to this type of novel hack. So we'll see.
Glad you brought that up, Dave, real quick before we move on.
Sure, absolutely.
So that RSA, the annual state of security survey that you and I often do in collaboration, will be out in March. And we're not seeing a large amount of vendor consolidation. We're seeing interest in consolidating, but we're not seeing the numbers actually back it up. And this particular iteration, which will be out in just, at this point, just 4 or 5 weeks from now, is going to have a lot about this agentic AI security around it as well. So maybe we could jump back on there, or we can do it live out at RSA.
Yeah, I'd love to have you back on there. And this is a good example of the daylight between vendor marketing and practitioner reality. When you talk to the practitioners about, your survey data, and you say, look, you're not seeing the consolidation, every practitioner to an individual says, yeah, no kidding. That's what do you tell me something I don't already know. Whereas the vendors will vehemently debate that data and argue with it. So the data doesn't lie. All right. Next prediction, number 9. In case you haven't heard, there's a really big memory shortage. High bandwidth memory, NAND, RAM are all in short supply, frankly, because data centers are sucking up all the demand. So our prediction is that hardware prices, which are already elevated, as we're showing here, with a large portion of the sample showing up to 14% price increases, are going to stay elevated, we think, into 2027. And you're going to hear terms like, in PCs, especially like AI optimized, which is code for, we don't have enough memory, so we've optimized it. And so supply chain is going to separate winners from losers. Nvidia obviously is going to get priority, but it's going to be a knife fight in laptops. Apple's got scale, Dell's moving aggressively. They announced at CES and even before that at their last financial analyst meeting that they're going hard after consumer PCs, an area where they've struggled. And they have one of the world's leading supply chains, of course. Vast has a big marketing campaign now around its efficient use of flash. So this is going to be a big deal this year, Erik, but it's not good news for buyers, is it?
No, not particularly. I don't know if we had the chart up, but we'll get to that in a second. I also think it's interesting that it's really kind of coinciding right around the time where you should be seeing a hardware refresh cycle in a lot of aspects as well. So right now, again, I think the supply demand is off. I think the vendors are quite happy with it. I don't see them in any real rush to change it. Thank you for bringing the chart back up. So what we're looking at here, back in 2024, late 2024, we hit a trough where pricing increases for hardware was only around 2.5%. That's gone up a full 100 bips. We got a full percentage point higher now at 3.6%. And we're seeing on the right side a rising intent on hardware pricing. I don't expect it to change anytime soon. 25% of the respondents say they're seeing it rise from 6% to 20% or more. Those are really significant price rises that they're trying to swallow. And one of the derivatives here isn't just what we're looking at, but think about the security names. Think about a Fortinet, Checkpoint, Palo Alto on the networking side, Cisco, F5, even Arista. Of course, they're in the AI hype at the moment, but all of these could have derivative impacts on these type of hardware refresh cycles that are going on right now. So I think this is going to stay much longer than people realize.
Yeah, and it's a good point you're making. The vendors are going to benefit from this, right? So we'll keep watching, and those that can get supply. And at the end of the day, you need hardware to run software. So it's going to be interesting to watch. Okay, our final prediction. We're going to end with a bang here. It's around AI's impact on jobs. I got into an interesting debate at UiPath this year with Rebecca Knight, my co-host. Erik Brynjolfsson was on. I was taking the other side of it. Rebecca was basically saying, no, the AI is eating jobs, especially at the low end of the spectrum, entry level. And we asked Erik Brynjolfsson about it. He's like, well, it's not really showing up in the data, but anecdotally, it's kind of there. So anyway, our prediction is, and so she was taking the other side. I was saying, well, it's not really there yet. Well, we think it's there. Prediction number 10 is AI eats white collar employment. It's going to show up in the numbers, and there's going to be no debate about it in 2026. It's already, as we say, hitting junior and entry-level positions, and we're seeing it in the survey data as shown below. Today, it's mostly around avoiding headcount is what we're seeing. We see the uptick there, but we're seeing a little bit more evidence of headcount reduction as a result of AI. Scaling without labor is going to become a major theme in 2026, and as a corollary, we expect blue-collar jobs to grow dramatically. We're talking about specialized plumbers for data centers, HVAC engineers, data center builders, cooling experts, et cetera. These are professionals that are highly skilled in their trade craft and are in huge demand right now. So Erik, AI taketh away, but over time, AI will giveth. But our prediction is that 2026 will be a crossover year and there will be some pain. Your thoughts, and take us back through this data.
The data shows it absolutely clearly. The job impact is here. It's real. It's only going to pick up pace. So let's just take a look at the box you have there. So back in July of 2025, 21% said they were going to be limiting future headcount due to AI specifically. That has skyrocketed to 30%. I don't mean to alarm anyone, but when I cut this just by Global 2000 organizations, that goes higher. It goes to 34%. And then when I cut it by Fortune 100 companies, 42% of the Fortune 100 are saying they are going to limit future headcount because of AI. So the bigger the organization, the more they plan to limit future headcount. Now, actually strategically reducing headcount is growing more slowly. However, 14% to 18% in a half a year is nothing to sneeze at. That is still some material growth there. And again, we're not talking about 100 people we're surveying here. You can see that N up on the right. We're talking about 1,800 qualified IT experts and IT decision makers that represent real organizations across, the spectrum of industries. So this is 100% real. And unfortunately, I don't see that number coming down in future surveys.
Erik, it's quite an interesting time. I've seen every transition in tech from mainframes to PCs that really disrupted the industry and the industry structure. And then, of course, we saw cloud, mobile, social, big data, and of course the internet. Before that, this is bigger than them all because it's standing on the shoulders of previous waves. And typically, what happens in these waves is, the new is not quite big enough to offset the decline in the old. Even though the new is getting all the buzz and the markets get volatile and, you have winners and losers. And right now SaaS is out of favor. And of course, everybody's crazy about semiconductors and, stick around. It's like the weather. If you don't like the narrative today, it'll change. The talking heads are just reading headlines, but what we try to do is look at the data, squint through all the noise and focus on the signal. And this is what we've been doing now, Erik, for the better part of a decade. I can't tell you how much we appreciate here at theCUBE Research and SiliconANGLE and theCUBE with our partnership. You guys just provide a tremendous service to not only Wall Street, but also the vendor community. So thank you for the collaboration and all the great insights that you guys bring.
Feel exactly the same. Likewise, love working with you guys and collaborating with you and looking forward to many, many more years to come with it.
All right, good deal. All right, that's it for now. I want to thank Alex Myerson and Ken Schiffman, who are on production and do our podcast. Kristen Martin and Cheryl Knight help get the word out on social media in our newsletters. And Rob Hof is our EIC over at siliconangle.com. They do a wonderful job. Thank you very much, all. Remember, all these episodes are available as podcasts wherever you listen. Every week, just search Breaking Analysis Podcast. I publish every week on thecuberesearch.com and siliconangle.com, and you can email me at david.vellante@siliconangle.com or DM me at dvellante. Comment on our LinkedIn post and check out ETR.ai. It's just amazing. They've launched a new website, new platform. They get the best survey data in the enterprise tech business. This is Dave Vellante for Erik Bradley and theCUBE Research Insights, powered by ETR. Thanks for watching, everybody. We'll see you next time on Breaking Analysis.